Well, good morning. It's me, Kenny Polcari, your host of the party. And today is Friday, June 14th, 2024. And there's a lot going on. The sun is out. The sky is blue. It looks like a spectacular day. Let's see what that says about the markets. But here are the things you need to know to get your day started. So there are news flashes all over the place, right? PPI surprises with a notable weakness read, right? Something that's going to offer the Fed some cover and support. Tech takes the S&P and the Nasdaq higher, leaving the others behind. Think the Dow, the Russell, the transports, right? Bonds rallied, yields declined naturally, that inverse relationship. Oil continues to churn while gold just boomerangs back and forth between the 2,300 and 2,400 range. European markets are all lower as France remains in turmoil. And what do we have for dinner tonight? We're going to have the linguine over shrimp scampi, right? Delicious, simple to make, sounds complicated. It is not. And it's a summertime favorite for sure. Anyway, so here's the first news flash. So Lonnie in Texas win big as Tesla, which was up 4% yesterday at 182.56, as those shareholders approved the outsized pay package, right? Some 56 billion, along with the move from Delaware to Texas, suggesting that he has lost zero support amid slumping sales and poor stock performance, which is down 56% off the November 5th, 2021 high of $414.50. Now, while all this sounds very exciting, the story is far from over. The money was not direct deposited into Lonnie's bank account, not yet. A Delaware judge nullified this package in January. Lonnie, of course, is appealing, and if unsuccessful in Delaware, then when he moves his company to Texas, he's going to revisit this whole story in a state that has more favorable court system. Garish? Now, this is surely to be continued. And here's another news flash. Tech continues to power markets higher. The S&P was up 12 points, and Nasdaq was up 60 points. Both measures closing once again in a new 2024 high. The others, though, were not in a celebratory mood, which drives home the fact that the rally is being driven by anything tech and AI, right? Broadcom, AVGO, they design and develop and supply semiconductor and infrastructure software solutions. They rose 12% yesterday to $1,678 a share after announcing solid earnings. And guess what? A 10-for-1 stock split, which appears to be the things these days. 10-for-1 stock splits amongst some of these tech companies. Adobe reported after the bell, right? They beat expectations and they raised their forward guidance, easing any concern that they're falling behind in the generative AI space. Now, what was really interesting, at 4 p.m. Last night, Adobe closed down $1.13 or 1/4% during the regular trading day at $458.74. But when they reported after the bell, the stock exploded, right? Traders and algos going into a frenzy, taking it up 66 points to, or up 14.5% to end the session at 525. This morning in the pre-market, they continue to push the envelope, and the stock is quoted at 526, 528. So there's still lots of excitement building around Adobe. The Dow, which is not a tech index, lost 65 points. The Russell, again, not a tech index, gave up 18 points. The transport's not a tech index, lost 161 points, while the equal-weighted S&P ended up losing 17 points. That's where they just give everyone the same weighting, right? So what this tells me, and what it should tell you, is that while the economy appears strong, investors are concerned, right? Tech is masking the broader underlying weakness across a range of industries. The market feels a bit stretched up here, something that we've been talking about, something that you should not be surprised about at all. And here's another news flash, right? And then there's lots of geopolitical issues that only add to the angst. Note what happened in France over the weekend. Then there's this out-of-control spending here in the U.S., right, that they keep piling on. And then there's the election, which is heating up even faster and faster. The first presidential debate is scheduled for June 27th in Atlanta at the CNN studios. We're going to have Dana Bash and Jakey Tapper will be moderating that presidential debate. And again, while political stuff doesn't really price stocks in the long term, it does create, and it can create, short-term chaos, something that could be viewed as very negative or as an opportunity for the savvy investor that takes advantage of the angst. Remember, a pullback would be healthy. Shake the branches a little bit, see who falls out. Test the commitment of the buyers once it gets down to kind of trend line trend line support. And here's another news flash. The PPI, the Producer Price Index, unexpectedly fell yesterday, the most in 7 months, surprising even the most generous estimates, right? Adding fuel to the latest narrative that inflationary pressures are subsiding, giving cover to JJ and the Fed to consider an additional interest rate cut this year, okay? So now we're back to discussing 2 cuts before the ball drops in Times Square on December 31st, even as the FOMC committee favored just 1 cut that we saw on Wednesday, right, when JJ came out at the press conference. Categories used to measure the Fed's favored personal consumption expenditure index coming in softer in May than they were in April. Top line PPI month over month came in at negative 0.2% versus the expected plus 0.1. Ex-food and energy at 0% versus expected up 0.3, while the core PPI year over year came in at plus 2.2%, and ex-food and energy came in at plus 2.3%, both down from the 2.5% estimate. Now, don't get me wrong, I think it's great. Inflation is subsiding, and that's a bullish story, rather than the collapsing economy, which would not be a bullish story, right? This report only kicks the door open a bit more for traders to speculate on an additional rate cut, right, rather than the one that JJ discussed, and we just talked about that. So expect now to hear, the double rate cut narrative. Now, some analysts are now factoring in those cuts as early as July and September, which I don't see. Others continue to push the November and December rate cut cycle post the election, right? Now, something that makes more sense given all the drama surrounding the election and what will surely be seen as election interference if the Fed moves prior to the start of mail-in balloting, which, by the way, begins as early as September, right? Something that I still don't understand, but that's a whole nother story. You can see each state's start date varies, driven by their own election laws and regulations. Now, just to be clear, mail-in voting can start as early as 45 days prior to November 5th, which puts us at September 22nd, just 4 days after the September FOMC meeting. And here's another news flash. Bonds rallied on all this better than expected PPI news, right? Sending yields plunging. The TLT was up 1.5%, the TLH up 1.1%, while the AG gained 0.5%. Now the easing inflation story has certainly helped the bond market recover over the last couple of weeks. The TLT is now only down 5% year to date after being down 12.5% just weeks ago. The TLH is down 3.5% after being down 9.5% weeks ago, and the AG is down 1.4%, this after being down 4.5%. The 2 years now yielding 4.67%. That yield is down 6% from 2 weeks ago, while the 10-year yield is 4.2%. That's down 11% from 2 weeks ago. Oil continues to churn right between the trend lines, right? 77.55 and 78.55. This is OPEC slammed the IEA for their latest report, suggesting that demand is peaking, leaving a major surplus in the market. The kingdom told the world that it's dangerous commentary, especially for consumers, only leading to volatility on an unprecedented scale. Now, OPEC, talking their own book naturally, expects to see demand and consumption increase at least until the mid-21st century, although they conveniently do not discuss what the carbon emissions are going to ultimately do to the environment, right? Now, just to be clear, there are many, many analysts that are siding with the IEA, and that is not making the prince very happy. This morning, WTI is trading down 36 cents at 78.25 a barrel. So the next move is going to reveal what traders think. Are they siding with the IEA or are they siding with OPEC? A move down and through support at 77.55 is not what the Saudis want to see. But moving up and through long-term resistance at 79.62 could prove to be difficult if the story continues to gain momentum. Gold continues to boomerang, right? It's up 20, it's down 30, then it's up 20 again. Yesterday, gold tested the lows at 23.18, and this morning it's up $20 at 23.38. Remember, lower rates are going to send gold higher, while higher rates will send gold lower, right? That inverse relationship. So the boomerang is because the story changes from day to day. One day they're raising rates, the next day they're not raising rates. One day they're raising rates, next day they're not. News that the sovereigns are loading up on gold will certainly help the precious metal hang in there. Remember, gold is or it's viewed as a safe haven asset in times of unrest and uncertainty in the global equity markets and the global political markets. So I expect gold to continue to hold its current position as markets get anxious as we move through the summer into fall and we move through into these elections, right? U.S. futures this morning are decidedly weak. Dow futures down 340 points. S&P's down 30. Nasdaq down 55. The Russell down 31. And so you ask why? The economic news is positive. So why is the market down? Hello, we've talked about this. We've discussed this, haven't we? The market is a discounting mechanism. The rally we've seen up to this point was all about the expected good news. And guess what? Now the expected good news is here. So we should expect to see some profit taking as concerns simmer about what the next move will be for the economy, for the Fed, and the elections. I'm not expecting a disaster, but I will say, I am voting for a pullback, right? I'm rooting for a pullback. A 4% move lower would only take us to the trend line, which would be the first level of support that needs to be tested. And a 4% move is hardly anything to panic about. Even a move to the intermediate term trend line is 5.5% from here. Again, well within the normal trading bands. But yes, a bit more uncomfortable. But get uncomfortable with being a bit uncomfortable, right? It keeps you on your toes and it helps you eliminate the noise, right? Because that's what you need to do as a long-term investor. You need to eliminate the noise. European markets are all lower this morning. France down 2.4% as the political turmoil there is raising all kinds of concerns that a win by Marine Le Pen's far-right National Rally Party is going to usher in looser fiscal policies. Macron is fighting for his life. Snap elections to begin on June 25th and then again on July 7th. The recent uncertainty in France is causing stocks there in Europe and in France to decline and forcing France to pay a premium on its debt, sending prices for bonds down and yields up. The turmoil is wiping out most of the month's gains, and don't expect it to change anytime soon. Elections tend to create volatility, especially in France. For some reason, they tend to be even more volatile. It must be all that French passion, right? But either way, in any case, French weakness doesn't really change the broader strengthening Eurozone economy narrative. Again, politics can and does create short-term chaos, but it doesn't mean that you have to panic, whether you're in Europe, whether you're here in the United States. The S&P closed at 5433, up 12 points. It's now 10%. It's now up 10% since the lows of April. 10% in 2 months, right? It's up 13.5% year to date. It's up 43% since January of 23. So put it in perspective. A 5% pullback is hardly anything to work up about. And if you're someone who's just getting in, this is where you need to exercise patience. Go slow. Feather yourself in over time. Do not spend all your money on day one. As I have said, while it feels good for the market to rally, it doesn't mean that it's going to continue just to rally, right? I would argue that that it's been setting us up for a retreat, right? And what you see, and when you see opportunities, you don't need to chase anything, right? You need to just find your opportunities rather than chasing extended stocks, right? There's no reason to chase at all. Remember, consider your time frame, consider your risk profile, talk to your advisor, and make a plan. Call me to discuss, helping you create that plan, right? Because I always enjoy talking to people and helping them create long-term and generational wealth. Okay. So what are we doing for dinner tonight? So it's kind of summertime again. Here we go. It's linguine and shrimp scampi. It's shrimp scampi over linguine. It's an easy dish to make. It presents beautifully. It doesn't take too long to make, and it's always a family favorite, right? Maybe takes you 20 minutes to prepare and make if you got everything kind of ready, unless you have to go shopping. You have to go shopping, it takes you a little bit longer. Anyway, for this you need a couple of things. You need a pound of large, clean, deveined shrimp. You need butter, olive oil, onions, garlic, lemon, white wine, chopped parsley, salt, and pepper. And you need a pound of linguine, right? And of course, you need some fresh grated Parmigiana cheese to put over it at the end. And I know there's some Italians say you never put cheese on fish. I go, not so much. You want to bring a pot of salted water to a rolling boil. Just have it on the back burner so it's ready for you when you need it. In a large saute pan, you're going to melt the butter. You're going to add a splash of olive oil. You're going to add the crushed and sliced garlic and the sliced diced onion, right? You're going to saute that around for about 10 minutes. Keep the heat on medium so that you don't burn the butter, the garlic, or the onions. Now, add the linguine to the boiling water. Let that cook. 8 minutes al dente, right? Stir it 8 minutes. Next, add the shrimp to the saute pan, season it with salt and pepper, saute it quickly so it gets nice and pink on both sides. No more than 5 minutes max because they'll pink up right away. Now add the juice of 1 lemon, complement that with a splash of some of the white wine, you know me, Pinot Grigio, Santa Margarita, maybe about 1/4 of a cup. Turn the heat up, let the alcohol burn off. It'll burn off really quick, no more than a couple of minutes. Now strain your pasta, always reserving some of the pasta water, right? The tears of the gods. Add the pasta right to the saute pan, mix it up. If you need to, you add a ladle of the pasta water to the pan just to keep it moist. Then you're going to take a handful of Parmigiana cheese. You're going to toss it in there. You're going to mix it up really well. You're going to serve it immediately in warm bowls, and always have the cheese, extra cheese, on the table for your guests, along with the chilled bottle of white wine. Again, the Pinot Grigio, Santa Margarita. In any event, it is a gorgeous day here. I can't wait for the day to get started. I will be on Stuart Varney on Varney & Company at Fox Business at 9 a.m. Join me, won't you? Until Monday, take good care.